it's important. There's a lot of confusion about the new Freddie and Fannie Mac guidelines as far as like, people talking about the lower credits getting better rates and stuff like that. Is there a more, is there a layman's way of kind of breaking that down for people? Because even me, it gets
Sure.
confusing. I know as a real estate agent, it kind of gets confusing. So is there a way to break that down for people to make it more understandable for them?
Sure. Let me do my best here. So what I want to start with is there's everyone made a big deal about May 1st being this date. Well, May 1st was a delivery date for loans. So lenders have already had this worked into their pricing for really 60 to 90 days at this point. And when I say delivery date, typically you have somebody who has about a 30-day closing, and then 2 to 4 weeks after closing, that loan actually turns around and gets delivered to Fannie and Freddie. So May 1st was that delivery date. There was no material change that happened May 1st to people's pricing. Now, the other thing that's really important for people to see is, yeah, the headlines look like, oh my gosh, if you have lower credit, you're going to get a better rate. Couldn't be further from the truth. At the end of the day, you're always going to be better off if you have a higher credit score. And if you are putting more money down, that's always going to be the best case scenario that you can get for interest rates. Now, have some of these loan level pricing adjustments come down for people with lower credit? Yes. So what Fannie and Freddie are trying to do is promote affordable home ownership. Well, there's a couple things to pay attention to with that. One, if you're under a 700 credit score, really conventional loans really typically don't even make sense to look at from a price perspective for you, because FHA is going to deliver a better price, a cheaper monthly payment, a cheaper interest rate than somebody trying to go a conventional route. The other thing that's really important too, while all these headlines are scary and sexy and get people excited, get someone to talking about, you still have to qualify, right? So people that are carrying these lower credit scores, they still have to go through an automated approval with Fannie Mae or Freddie Mac, and then there's underwriting on top of that. So those people aren't even really getting approved eligibles, which is what we're looking for when it comes to the automated underwriting system. So to me, it's not a complete nothing burger, right? It's definitely gotten a little more expensive for people with higher credit that are putting around 15 to 20% down. That's really where we've seen the main jump up in price. Now, is it life-changing amounts of money? No. Does the mortgage industry disagree with it? Absolutely. Have they been trying to fight it for the last 6 months ever since they announced it? Yes. But, at the moment, that's just the way that things have decided to go. But nothing has been kind of switched overnight on May 1st. It's still exactly what it's been for the last 3 months.
Got you. So basically, they're just trying to promote, like you said, more affordability for people on the lower end.
Sure.
They're not really punishing people with better credit. So at the end of the day is, don't screw up your credit to try to get a better rate. Like, better credit's always going to be better for you when buying a home.
No doubt about it. No doubt about it at all. Yeah. Don't go out there and miss payments or rack up credit card debt because you think that's going to get a cheaper interest rate on your mortgage. It won't.
Yeah, that's not the smart thing to do.
No, not at all.